Hey everyone. So I just want to take a moment here and tell you what you're going to be watching today. So before you get involved, we're going to look at weekly charts that were stocks that I either traded this past week and that look like they have potential for the next upcoming week, and also stocks that were recommended that they wanted to see through the followers that I have on Twitter. So that's what you're watching. That's what you're going to get today. And what I would recommend, and someone has been doing this, sent me a comment, and I really appreciate the comment. They take notes because I talk pretty fast, and there are a lot of processes, things that you should be looking for, key levels. So some people take notes, consider it. It's probably easier than watching this a couple times is how I would consider it, but that's what you're going to be getting today. So, and I think we're going to wind up talking about a lot of process, especially with how people just got absolutely shellacked last week without having true processes in. And as always, subscribe to this channel. Click on this channel for notifications because this information is timely. Now let's get into it here and just start. And I'm going to look at charts a little differently today just to kind of get people to think a little differently. So let's get rid of the candles and let's just get rid of all the indicators for a minute. And the first one I really want to go over here, we're going to get rid of this because I'm not sure why that's there. Remove this arrow only. Okay, so AMC, there has been a tremendous amount of talk about the stock in regards to what's going on with the short squeezes and everything else. For a moment, everybody needs to realize that this is a viable company that may come back as things progress. They've handled their bankruptcy issues. They raised capital. They've done an excellent job with that. And you have a beautiful chart here, but just look at what's going on here. And I think it's really important just to focus on price for a minute. And then we can throw the bells and the whistles in. So this 771, we have not broken any one of these peaks on the weekly chart, except this one 4 weeks ago. And we ran up to here, and as we stated on Twitter, we rejected this line. Clear rejection, right? And then we came back down, and then, oh, it's over. This is not over. So what you have is you have a week after this massive sell down, you have a day where you took out a lower low, and then the next week you have an inside week off of this, right below this. So we were setting up for a curl. And I talked a little bit about this on Twitter this week, but let's take a look. So then you open at the low, and then you close above major, and that is major resistance right now, and you closed above that, and you're at $8. This has the potential to go higher. So what I would do just by looking at price is watch the 771 level and look at the 1320 level because that's where we're going to. That's where we need to break through next to keep going and breaking these patterns. Now let's throw in the bells and whistles just a little bit more and see if we can gain any more information on that. I'm not really crazy about how that looks, so there we go. So you can see like the long red bar, but you see how we got tighter here? And do I want to close at the higher end of the bar? Yes, of course I do, but we didn't do that. We closed down here at the lower end. And now let's just throw in a couple more bells and whistles. And let's look at this with our volume and our moving averages. And I'm not going to get too fancy on the indicators, but let's just stick with this for a moment. This is the second highest volume the stock's ever had this week, and nobody's talking about it. It's really important to focus on that. Now, we have to get above this 200 week and close there, and we did once. So there's a pretty decent probability that may happen again. Once you do something once on a chart, it usually will repeat itself. So I would watch this key level and kind of go from there. Now, more importantly, once you clear this level, you're going to get a whole slew of institutional buyers that are going to come in. When you are over this after a run-up like this and come back down, they're going to say, okay, this is real and there's real interest here. So keep that in mind and look at these key levels. I think it's very important. So 8 PPS, and we're just going to do the same thing here for a moment. Go to the bars, get rid of the bells and whistles. I really like this, and I want to just hammer 1 point home. So you can see this trajectory, right? Okay, and I understand we've gone from 100 to 65. I get that. And if you're in that, you went for a wild ride and probably panicked and reevaluated your life choices. I get it. I've been there. I've been doing this over 20 years. So what you can see is this huge base and then breakout. We have never broken this upward channel since we began this move. So to think that that's going to happen now just because the stocks come down doesn't make any sense. And the one line that I really want to focus on here is this is your upper trend, okay? And people that follow my newsletter, which is free, and there's a link in the descriptions for you to click on if you're interested in following along with us. So you can see how we broke here, right? And we went through it, and then we closed over it again. And we closed right in the middle. So what does this mean? Well, and people that have been following me for a while understand this. You see this line? When you break this line, when you break an upper trend line like you did here, you have a parabolic effect. This is not breaking down as much as this is setting up. And you know, it's not the most beautiful thing in the world for sure, but we are setting up here. And I think you need to take that into account. I would be concerned if we close weekly below this line. Until then, I don't really have an issue with it. And I'm not gonna try and drill down into this one even more. But let's throw the bells and whistles back in and let's see where we're at here. So you can see we didn't even close below the 5-week. We haven't closed below the 5-week except once where we closed at the 5 and the 8. And look how we bounced right off of that and exploded up. Now, I will cover the indexes at the end because you can see more weakness if the indexes do a couple things. So at the end of this video, I'll cover them very briefly because you need to understand that you have to make sure that your indexes and sectors are all aligned. If they're not, and you're trying to buy a stock, you know, it's like it's like in quicksand. It's not going to work as well. So you just have to know that, you know, and have an understanding of where we are in the indexes. But you see how we flip here, and now we're wedged in this. Once we clear this wedge, you're going to wind up seeing this thing continue its trend and push higher and the trajectory keep going. And I think that this is one that you really need to watch. So I'm going to do a daily on this because we really don't have a lot. And frankly, I should probably even do an hourly because you want 30 bars. If you don't have 30 bars, right, 30 days, 30 patterns, 30 hours, whatever, it's statistically insignificant. But what you can see here is this little pattern that's going on here. And let's get rid of these indicators again for a moment and just look at price, right? Let's just look at this. So here's this channel that's been forming. And we made this channel by cloning this line and putting it here because each channel has to have the same trajectory. But you see how you come down here and you're bouncing along this? And now I've got a support line right here. And you can see that. So this is really support. 272. I don't know what they do. I have no idea what this company does. I trade technicals, not fundamentals. They do something with blockchain. If somebody knows what exactly they do, please message me and let me know. I find this pattern fascinating. You know, with this cup and handle, and then they explode up, and then we're taking out highs. We retest the support, and we go right back into the channel, and we're still in it. This is really interesting. But let's just overlay now some indicators. And you can see you're trapped between the 5 and the 8 daily moving average. We did a video on that before that's in the indicators video. So look, I mean, you can see this. We have a hammer bar. I have a hammer now inside of a wedge, and I'm on the lower end of the wedge. A higher high above this line, right, where the, you know, this is a 10, and we can use the 10 for now. But once we get above that, but that would be interesting to see because we usually use an 8. And I think I was looking at the 10 for the on the weeklies. So you can see where that puts you, right? But a higher high here, that's even more interesting because a higher high here gets me here and then gets me up to the top of this channel. So this is you know, and eventually the goal is to break the channel. So this is one to watch for sure. And I got asked about this. Let's look at the bars, get rid of the indexes for a minute. From somebody that's like a more of a long-term holder. And you know, the one thing I would say is here's your channel. And we haven't really broken that channel, have we? We haven't even come close to really breaking the downward channel. You know, we're not going to go straight up. You're not going to go from 160, you know, to 200. It's never a straight line. So we've come back down here, and we may test support at this 120.81 level, but just look at how beautiful this is. And if you really wanted to, you can clone these, as I stated, right? And then what you do after you clone them, you can kind of get an understanding of where the next line should go. And I've been doing this a long time, so it gets very easy for me. So if you get frustrated and go, why the heck is the line there? You'll figure it out over time, and I can do a tutorial on it. But see how you respect this? You respect here, and then look where you open, right? So, and then what happens? It rejects. So this was a clear failure back into the channel, right? It didn't continue to go and go parabolic like I'm talking up that APPS may do. It actually fell back into the channel. So realistically, it would be nothing for this to come to that 2081 level. And what would I do? If I was a long-term holder of this or wanted to be a long-term holder, that's where I would look at adding to the position. Again, with the bells and whistles, this is a really nasty red bar. And, you know, we opened at the high, closed at the low. It's pretty bearish. I would watch, if I wanted to add here, I would still watch this lower low. You know, that would be a concern of mine. And you can see, yeah, so you can see, right, we have the 5-8 crossover here on the moving average and the 28-week or 21-week right here. So you could see what's happening, and you can see how you could go to this 21-week. And you know, history tells us what's going to happen. This is the last time it went to the 21-week. So we bounced. Realistically, that's probably what's going to happen. You know, and you have to look at the past performance. This is when everybody probably thought it was over again. This is when everybody thought it was over, right? And you can just see them. It's not over. This trade is far from over. So CCIV, let's just get into this on a daily for a moment, and the bars, and get rid of the bells and whistles. So, you know, that target of mine, I have a line that I had here, and I was trying to explain to people where I think that this could go. Now, you're at this 26 level, and this really needs to hold. You've broken the upper channel on this, and you've broken below it, and you actually opened on it and then just went straight down one day. You know, I have stated this, I'm not a fundamental person as far as that me entering positions on that. But the nuances of not understanding that the company, meaning that what a SPAC is they go out, they raise money, they put that money into an investment vehicle, they then go out and buy a company. So CCIV bought Lucid Motors for $15 a share. Why people are paying $60 when nothing has changed is beyond me. It doesn't make any sense. And this is some of the froth that you've just seen come out of the market, right? We just got hammered. And I explained that I thought FSR was a better buy. And it was very interesting watching the responses on Twitter. But technicals are technicals and price is price. This was a key reversal level. And then the next day, everybody realizes what they own, and you pop right back into the channel. Now we have to break back into this channel if we want to continue our trajectory. Most likely, what I'm seeing here is forming an H, where we're going to probably go to this line and come down, and then test this 26. We need to hold that. Now, on the weekly, and I just want to clear this so we're all on the same page, this is your weekly bar. So it'd be nothing for us to stay in this range for the next week and still have an inside week. And then let's throw in the candles, and we'll throw in the indicators here. And let's go back to the daily because we need 30 bars, as I stated. And you can see red opens right there. I've got the 8 crossing the 21. I mean, this look, I think that we could have, on Friday, I'd even mentioned it, like the volume that came in was insane. We easily could have pushed to the top end of this in 36. And that's great if you want to trade for a day or two. But if you're looking statistically at this for the next 3 months and you're more of an investor, this needs to settle down and really reform itself and build back up and go from there. So I'm not a huge trader of value stocks, but this sector was so beaten down and it's moving. And I just want to point out a couple things. There is an enormous, and I thought this one was really interesting. That's why I want to cover it. Let's get rid of these indicators. 24.44, right? Look at this. Couldn't break it, broke it. Couldn't break it, broke it. Right? Every time. We closed above it. Okay, boom. Oh, we closed above it. So this is why it's so important, and I stress looking at price and weekly charts at the end of every week should be part of every trader or investor strategy. I don't care if you're holding for years. I don't want to day trade, I want to swing trade. I don't care. You need to look at the charts weekly. This strategy that's being proposed out there of we just hold and we hold forever is ludicrous. Ask the people that own General Electric how they did from the 1960s to the 90s versus how they just did for the past 20 years. And most wish that they sold the stock. So keep that in mind. There's reasons for this. And you need to understand what you own. But you could see how you broke this. And now we're back in this channel. Well, now that we're back in this channel, we could go to this top of this. We can go here. We could fill the gap, just like the casino stocks did, right? The majority of casino stocks have already rallied. So this is a very interesting chart. And if you're interested in these kinds of companies, let's put the bells and whistles back in. If you're interested in these kinds of companies, the cruise lines, you think they're going to bounce, that's great. Look at this one. And I would look at this one, as much as I like RCL, look at that. Look how the volume spike. Look what's going on here versus what we've been dealing with before. This is huge, right? You haven't seen volume like this in a long time. Probably not since, back here? Let's take a look at that. It's kind of interesting, right? Look at that. I mean, you haven't had volume like this since back here, and you've only had one other day of volume that was this great. That tells you that there's something going on here. And you can see this little volume line accelerating up a little bit, and we did double this week, 2x the volume. So we can push up to here, right? This hasn't gone all the way yet, and we're in the channel. What would change my mind about that? If we close below this 24.44, it would just tell me they're trying to pull the flim-flam and get me in, and then as they tried here and here. So that's how I would play this. But this does have potential if you're interested in the cruise lines. So CELH, this was one that we did in the newsletter, and we did very well with it. I think some portions of it, we even have a double. And again, if you don't get the newsletter, there's a link in the descriptions. Click it. It's free. It comes out 3 times a week. And there's some very actionable ideas in there, as well as the indexes are covered. So you cross your 5 and your 8, right? That's not the best. And let's drill down into this on the week. You just wedge right in here, right? You wedge almost between them. And then you tested this 51 and you tested this 67. This is really sloppy. But I do want to point something out that I think is very pertinent. And I'm not going to get into the bars here and just go straight bar on this one, because it's pretty sloppy what's going on here. There's no need to drill down. 67.72. But if you break this wedge and close above this, right, and you can see where your close is, like this is your all-time high close right here. So this is really important, right? What I'm saying is, if you get an all-time high close above this one, all these wicks aren't going to matter. This thing's just going to probably run, and look at your trajectory. This could really move. This is definitely one to keep on your radar. So I love this company, and it's one that I've been trading forever. And it looks like I was already looking at this one by all the lines that are drawn. But let's just really get into it here and see what we're dealing with and what's going on. So just on bars, you have this lower trajectory, then you have another one, and then you have another one. And I remember now why I left the arrows in here. See how the trajectory is getting higher and higher? That's telling me we're going to push. I mean, in so many words, and that's why I said take notes, because some of this stuff, if you do it yourself on other stocks, you'll start learning these processes. So see how you push? Now we have this level, and I'm in this channel, right? Here's the channel from here to here right now. So, and maybe the channel flips. So let's see what's going on. If I can close, well, this is the highest close. This is the highest close. So if I'm flipped this 64.20 line, this is going to run. And it's going to run pretty substantial. And this is why I always laugh about fundamentals. I'm not saying not to look at them, but the Super Bowl is over. So their lowest, the amount of betting on baseball is nothing in comparison to football. So that's not even playing into it. It's the more states. It's how they're going to grow. It's what they're going to become. So I would watch this, and I would definitely put this on your list, and you can see the bells and whistles and what we're doing. And now we're above all the moving averages after testing this low, and we're near highs. And I just want to point something out about relative strength, okay? The fact, and you can see this lower channel here on the daily, but when you have these moving averages and now you're going to all converge at one spot and push up, this is pretty substantial. And if you look at the underlying indexes right now, if you compare this to, let's say, the NASDAQ, you will notice that we are above all our moving averages and the NASDAQ is not. That tells you what the next group of leaders is going to be and that this has a high relative strength. And again, I jot that down and I would look at that and think about that when you go and look at your positions. Is my stock stronger than the overall market? And if the answer is no, you need to ask yourself some questions as to why you're in it. So this has been an enormous winner. And there's a gentleman that writes a letter, John Lupton, and he did a fundamental analysis on this. And really great story. And this is really where he took it off here. And it was very well done, the piece. It was worth reading. I won't trade it until something happens. And that something that happened was a couple key things, right? So you can see this line. And let's get rid of these indicators so that we can just look at price and start understanding how important price is. So you see how you broke this. I mean, this was a very clear technical move. Now let's overlay that in case we want to be even more cautious. I want to wait until I break this double top and this wedge. Okay, I did it this week. And so there's your buy. And you can just see how they moved us up, right? Through these levels. Now, once you're here, now you have this whole base, and now you take off. Now, let's throw the bells and the whistles in. Okay, that's not clicking. There we go. And there we go. Good. So you can see how this completely encapsulated us up here, right? So that's really good, and I really like that. I think that that's something that we could focus on here. I think you could focus on watching this try to close higher, but realistically, we need some consolidation in here. But if I could just close just above this 78.33 line, see you opened and closed there, right? You opened there a couple times, close there, and it'll shake people up a little bit, and you have these wider bars happening. If it doesn't do that, we're going to go and test 55.74. We're going to go and test this 50 level. Does it mean the trade's over? No, it just means it's resting, and then we get back into it. So this is one that we talked about early in the week, and it really set up perfectly. And let's just get rid of these indicators again and just look at price. So as I've stated numerous times, when you hit a support and you bounce, you can really move, and that's what happened here. But also, here's this upward trend. And if you drill into this, when you flip this, that's when you got this momentum. So let's just look at that for a moment. Okay? So here's that line. Here's the daily. When we flipped that day, see how we hit it that day? I didn't even look at this yet. But see how we hit it that day and then rejected and then opened here and everybody thinks it's over? And they undercut us and then jam it up. So now that you're here, right, you can see where we're at. Well, that's kind of interesting, isn't it? So let's drill down into that, look at the hourly, and tell us if the hourly looked at that. Okay, so you can start seeing what I'm putting down here, right? This whole move, once we broke, was in an hourly chart. So let's go again. Let's drill down even more. Okay, so you can see again this move. Once you cleared that level that we're talking about here, that was it. And this is just a 15-minute chart. You never looked back, right? And you just throw that out there for a moment, right? Look at that. I mean, you can see one close below it, and then boom, you went to the high. So that's why those lines are so important, that you understand them. Understand that this is significant when it happens. And let's throw in the indicators for a moment, and let's just throw in the bells and whistles. You don't get more bullish than this. I can't stress this enough. Okay, you see how we closed at the top, we opened near the low. I mean, the only thing that would be better is if you closed at the absolute top and you opened at the absolute low. See how all these moving averages are now on fire? So how do you play this? Do you just buy it right now? No, you can't do that with it because the move's been so great that we could actually stay between 30 and, I would still want to close above this 25 level. But you could, you have 4 points here on a $30 stock. It's too much. So I'd like to see a pullback to the upper channel. And if that doesn't happen, and we flip this 29.27, you could look at buying it there with a 15-minute or an hourly chart with whatever your process is or pattern. But this is definitely, put that on your radar. And we're going to do, might as well do Bitcoin now. This is pretty standard stuff. And here's your wedge on your break. Here's your next support level. And you're right here. And if we break this, I was stressing this earlier, if you break this 41, you're coming down. And you're probably coming down to the 39 level and then the 33 level. So there's some key levels here. This is a really nasty reversal on the week because what you've done is you've closed here the week prior and then you've gapped us off the open down here. So we couldn't get out. It's what we call a screw bar. And that's exactly what they did. We'll just wait and see wait for it to bounce. And then it doesn't and you lose 20%. So, and then you reevaluate your life and what are you doing? And the whole process starts again. That's why it's so important to have a process. I mean, I hate to laugh, or stress this, you need to have a process. So like if I close here and I open here and that's the open, what am I waiting for? And I start seeing it come down. Why am I not selling? If I break this level, why am I not selling? So, and I just to put that out there as disclosure, I own Bitcoin and I have for a while. I have no interest. I look at it as a very long-term hold and a very small portion of my position across the board. But I have no interest in this, in trading and bopping this around because of what my cost is. But if I was somebody that bought up here on this break, I sure as heck would be out of this by now because this does have the potential to go into the 30s. And you really don't even have another weekly support line on a trend until about 28,000. And if you think that can't happen, you're wrong. And you've seen it where it happened here. And I don't want to hear that this time it's different, so please don't send me those comments because there's nothing ever different about human behavior. That's why learning price more than anything else is more important. And that's kind of the reason why, one of the reasons why I'm doing this is so people get that. Price really determines what's going to happen, and that's human behavior. And that never really changes. Other things can change, but once you truly understand price and human behavior, you'll see yourself do a lot better. So here's Moderna, and we're really just, broke the high, thought we were going to run, fell right back down, and now we're heading back to this 130 level. This has to figure out what it wants to be when it grows up, and we just don't know what that is yet. I'm between the 5 and the 8 week, which is not really where I want to be. And I have this underneath here, and these bars are getting wider. See how they get wider and longer? When that starts to happen, it can mean a change in trend. So we need to see what happens here and see how this plays out. Now, the one other key level, just by looking at this, you can see right in here, right? But let's just do this one for a moment. So this is an old trend line. You can see what happened when we broke here and how we exacerbated to the upside. You can see how we broke down it and then we reversed finally and then again, right? That's why these lines are so important. So, but look what's going on here. This realistically could easily test to the 130 level and still be in the upper channel. So that is possible. And NIO, this one just, and let's get into the bars. Obviously, this is one that we've had in the newsletter, and it's really disappointing because I really like the company's fundamentals, but price is price, and everything else is just a waste of time. I mean, that's truly how I feel after doing this for 20 years. So look what's going on here and how you test and break. Open and break through the falling wedge. This is a falling wedge. Falling wedges are bullish. They are not bearish. Remember that. You want to be in stocks that have falling wedges when they break out of them. So here you are, and you broke to the downside. When this broke, that was it. Game over. And that's exactly what happened. We came down, and we came down hard. Now, if we overlay a couple levels to this, and let's just throw in the candles for a moment, you can see this is a nasty red bar where we open at the high and close at the low. And don't justify it by saying, oh, the week was bad. When we get to Twitter, you'll see that the week was not bad. The stocks that we were in may have been bad, but there was plenty of opportunity this week to make money. So what you're seeing here is we've tested this level and we've bounced off of it. If you break this 41.83 now, this is going into the 30s. And let's just overlay some indicators with it now and see what we're saying. So, yep, you see how we closed right on that 21 week, and the 5 and the 8 are crossing. And I mentioned that indicator video before. It's worth your time. But see what's going on here? So we need to hold this, because if we don't and we come lower, we're going to have a real issue, and we need to watch that. So this is one that I truly, really like the fundamentals of the company. I think they're going to be around a long time. Again, I'm going to say it, price is price, and that's how you make money and be consistent. You need an objective process, not I really like the company because they're going to do this and they have a new widget and that's going to make everybody super fast and you don't understand. I understand. You need to look at price action and what's going on. That's how you're going to be consistent and profitable and stay in the real winners. There's people that have owned Netflix for 10 years because they bought at the right price and they were able to understand the technicals over time. And when your cost is cheap, once that happens, you can stay in it forever. You don't have to day trade or swing trade to make a lot of money, but you do need to understand price action. So let's just look here at what's going on. Boom, boom. And then what do we do? I mean, this was telegraphed, right? We were in this in the newsletter, and we got stopped out, I think, at 33, 34, after buying, I think, a 36 breakout. But look at this. Right on the channel. Literally right on the channel. Now we open up above it, and then they jam us down on the day. And let's just look at the candles now so we can get a better understanding of what's going on. So this is your support now, 2250. And if this breaks, it's going lower. I will say this because I think it's interesting, and I do watch a lot of her work because her fundamental analysis is unprecedented with Kathy Wood and ARK. I'm not a cultist by any stretch of the imagination or the next new guru. You can see this little line right here too, can't you? So, but what I would say is it's really important that when someone has fundamental analysis and they come out with trends, to understand those trends, because that's where the new winners come from. That's where the big breakers come from. As of this weekend, she's the second largest shareholder in this company. And I find that fascinating. But, it makes me want to pay attention to it because she can't get out. I mean, it's millions and millions of shares. I think she's up to 10 million shares across the board now. But here's what's happening, right? Even all that, we're still going down. She's buying, and she still can't stop it from going down. And she just became the second largest shareholder. At some point, she's going to stop buying, and this can trigger, knowing something like that could trigger that move. And I know that we don't have 30 data points, but we have enough here where we can see these are going to cross and roll, and we need to hold this 2250 line, and you can see how you're getting a 21-week moving average developing, and it just happens to be developing at that 2250 line, which we said was critical. Also, I do want to point this out, and it's worth noting. You can be close to capitulation, and why do I say that? So, see this bar, and see how this bar clearly is greater than every other red bar by leaps and bounds. So here is the closest, 500 million shares. Here you are at 1 billion shares. So you're 2x volume here. When you see selling like this, it could mean that you're in the bottom process because of the capitulation. But there are a lot of people in here that wanted to get out of this that were in it earlier. And Peter Thiel made a decision that he wanted to be out of the trade. Soros said he wanted to be out of the trade. So I don't know how many shares they have off the top of my head, but I doubt that Kathy's going to buy all of them. So that's why we have to worry about price. So once again, on this, 2250. If we hold, that'd be great. This would be something that I would love to find another way in. So, I find these interesting because I haven't gotten any real comments on this one. It's like they just went away. Yeah, I understand that you've gone here and here's your flag, and your flag broke to the downside when we broke this, and we've really come in. Now that said, you've broken support here, but you tested the support level, right? And you bounced. So you tested 37 and you bounced. Now let's just throw in the candles for a minute. Nasty bar, but look at this bar, and I just want to hammer this point home. We open here, we think it's going to have support. They do that on purpose, and then they gap it down, but we hold here, right? We hold the bottom of this breakout wick. And this is a breakout because if you look at just the left side of the chart, this is when we broke out and closed here. Then what happens? Right? We test this and we become support. This is very interesting because we closed at the higher end of the bar. So where I would look here if I wanted to be in this is a flip over this 54 level, 53, 77, 54, whatever the high of this hammer is, which looks like it's 54.45. So you're looking at 54.50. You flip this and you have an outside weak bar, and this thing's going to could go right back up. Now let's just overlay some indicators and see if we can get a little more clarity. Yep, and there's your clarity, right? Here's your 21 week, which we bounced and held and ripped up after touching. That's huge to notice that's what happened. And now you're at, this could be your next level, this cross. So you just have to watch what's going on here. But 54.5, and I may become interested. So out of the cruise lines, this one has the best balance sheet. And let's get rid of all the indicators again. So this one has the best balance sheet. And let's just focus on this for a minute, because I think this is very important. And I showed you CCL earlier, and you can go back in the video and take a look at it. But look what happened here. Okay, we gapped down. We've already filled the entire gap on Royal Cruise Lines. We haven't done that on Carnival Cruise. Why would this concern me? Is because here, when we didn't know what was going on, the stock was supposed to make $7 a share. Okay, here I think they're talking about maybe $1 in 2022. Value investors are the people that buy these. You don't really buy cruise lines if you're trying to buy growth companies. Also, you have a major rising wedge here, right, off a bear trap pattern. So, and you should be able to see this wedge here and here. And I'll draw it real quickly. But you can see this, right? You can see what's going on there. Come on. There you go. And let's flip. I'll draw it. So we're cloning them because we want the same trajectory. And maybe, so look at that. Okay? I mean, I'm at a resistance point. I'm at the top of the channel. How does it respond to the top of the channel? Not very well. Once it broke through it, but then it didn't get above the support level. So keep this in mind. If I was interested in this, the only way that it would become interesting is if I break that 100th the century mark now. Other than that, it would not be overly interesting to me. And then we just overlay the candles, and we can see that this is a really powerful bar that happened here, and this was a really powerful move this week. And let's overlay the indicators. Yep, and now here's another one. So now not only do we have the top of the channel, not only do we have resistance, but I have the 200-week moving average. There's no reason to buy this until you clear this. You have a convergence of 3 different layers. And I'm not going to get too into convergences, but that's significant. And that would make me cautious in buying it. So this is one that I talk to a lot of people about, and everybody loves it, and keeps talking about, oh, they're going to earn this amount of money, and everybody's going to refinance. Look, if the 10-year goes up, just to understand this, and I'm going to look at this on a daily because I think it hammers the point a little bit more. Look, if I'm going to get a mortgage and the 10-year goes from 1% to 1.5%, okay, that is a 50% increase approximately in my payment. Okay, that makes a big difference to somebody that can afford a $1,500 a month payment or a $2,000 a month payment. It might not mean much to the guy that's buying the house for $10,000 a month and it goes to $12,000, but the single first home buyer, it definitely plays with them. So I don't know all the fundamental nuances of this business. I don't know why this won't break out of this pattern. The only thing I know about it is that it won't. So let price dictate what you're going to do. Stop telling it that it needs to break out because we've never had a hotter mortgage market. Maybe that's the reason it hasn't crashed, is because we have the hottest mortgage market. Maybe it's overvalued. I don't know. Frankly, I don't care. But now let's look at this line, because all I really care about is price, because that's how I make money. Now look at this. Look how we're rallying up, and we reject this downward trend line. Right? You take this point, this one becomes obsolete because it's had its chance. But look, so based upon that, it's definitely something that we need to hold on. Now let's go back to this for a moment. Okay, and let's just look at what's going on here. And let's just get rid of everything again and just look at price. Okay, we have not closed above 2302. Okay, so forget about 24 and this wedge, and we're going to break out of this weekly wedge. We cannot close above 2302 since we came back down. We did it up here the first couple weeks, but we can't get above this. We can't get a solid close above that. That should be concerning to you. That means that you have a seller up here, and anytime that it gets up here, they're just dumping. So let's keep going. This is Tiger, and this is one that we traded in the newsletter and did exceptionally well with. And I would strongly suggest that you put this on your list. I like this trade. I really do. And I'm just going to point out a couple things. We came right to the support level of 23.89 and held. Now, what does that mean for us? That's pretty important that we just happen to close, right here, about 3-4 cents away from major support. And yeah, I get it. We've gone from 38 to 40. If you overlaid Fibonacci, which I'm not going to do, you'd see that you're right at a fib level. And the only reason I'm not doing this is because I don't want to confuse what's really going on here. So look, this is the bar, and this is nasty. Don't get me wrong. This is not great. But you could use this as a stop level for trading. And let's just throw the indicators in for a moment. Yep, you could easily break and go to the 8. But everything's still pointing up, and this trajectory hasn't changed. It's just that we sold down. And people need to understand stocks do go down, and it's actually a good thing because you get to buy them cheaper. And you have the telegraph of the 5 and the 8 moving average here, and the 8, the 8 and the 21 that are telling you that it's going lower. But I have a wedge here, don't I? So let's get rid of these indicators for a moment. Maybe you can see this wedge. I just want to stress this again while I'm looking at it. You see this line? This upper channel? This is one in the newsletter I was telling people to trim. And you can go back through the newsletters. I don't delete any of them, and I don't delete any of the tweets, so people can follow along and actually see if I know what the heck I'm talking about. But see how you break over this trend, and then you open above it so they think it's going to run, and then they pull the flim-flam? This is where in the newsletter I put out and said, hey, we've been in here since 17, 18. You need to trim some more here. And I think we trimmed here too when it rejected. And then, you think you did wrong, and then it rejects up here, and that's okay. You don't need the highest price. You just need to consistently make money. So, you're never going to get the last dollar. But back to my point, do you see this wedge? Hopefully you do. Okay. This is setting up the steeper the wedge, the stronger the bounce. Now you see why I said take notes. So I just ramble. But there's value in this. So, and I want to say something while we're doing this. Please click the like button. My goal is to educate people on what it takes to be truly successful as an investor or trader, no matter what your time frame. And the algorithms work on clicks and likes, so please like this video on top of subscribing and clicking notifications. It's important for me to educate people. The more noise that I saw on here, and this is how I got into doing this, of people showing you laptops where they're on an island and they only trade 3 minutes a day and then they get on their yacht. It's a bunch of crap, okay? And the people that are telling you that they're batting 90%, it's a bunch of crap, okay? I've been doing this over 20 years. This is how I live and how I built up quite a nice life for myself. And I can tell you that it takes work for you to truly go through this, but the payoff is immeasurable once you learn what you're doing. And that's really the people that I'm trying to reach. So there's another little rant. Sorry about that, but it's really important to me that people stop getting bamboozled. so the greater the bounce. Zip, zip, zip. And I think we're setting up for this. I was talking to another trader friend of mine that still runs a fund, and he's looking at this and he's waiting for this exact same thing to happen. And it's a guy that has a sizable fund. But it's so fascinating that even us as retail traders can swim with the big dogs. And this is really setting up. So put this on your list. And this is Tiger. And I'll put that up there again, TIGR. But that trajectory is very important. So Tesla, and let's just do the weekly on this. And I'm going to state something on here. So this is Tesla, okay? And we have not broken the major uptrend of the stock. And we'll get to it. But just look at this and look at what's truly going on. Forget the name of the company, forget everything, and just look at the price action and what's going on with price action, because that's all that matters. And what you can see here is you have this channel, and you've broken this flag pretty substantially, and you've broken down. Now where are we? Right? We're right here. This is not great action by any stretch. You have a channel up here, a high tight flag, HTF is the acronym, but you have a high tight flag and then you break it. Boom. So you can see what's going on here, right? Okay. Now let's just overlay this with it and see if there's anything to this. Well, here's one line. Here's another line. Here's another line. What's happening to the trajectory of the stock? It's still in an upward trajectory. Until I start breaking these down, I'm not concerned. But you are and should be getting to a point where you get concerned if you break through this. If you break through this, you're going into these other channel lines. There's no question about it. Now let's throw in the bells and whistles. Okay. Look at this line and look at the significance of it now when you overlay this. We have the 5-8 crossover that we talk about. Here you are at the 21 week, right? And right here, we bounced off of it, and we bounced off this key level. So this needs to hold here. If you take out this lower low right here, you have a problem. You have a major problem because you're going to start breaking these lines. And when you start doing that, you start seeing panic. And the one thing I want to stress, that really stress, and you can see how this is even a convergence point, 463. 502 would be another convergence point. But what I want to stress is this. When a stock splits for the first time, which Tesla just did, when they correct viciously. And the reason is because the shareholders on the way up didn't have to deal with the magnitude of the move on the way down. And you'll remember, this is right around where you split. And now, what does that mean? I believe it was here, actually. And then, what does that mean to us? Well, look at this push, right? So they got to ride this all the way up, and now they're dealing with the ride on the way down, and they're not used to that type of, correction and drawdown, and they don't know what to do about it. So this exacerbates upon itself. So I would not be surprised to see this break and have some kind of waterfall event. So just keep that in mind. Finally, I did mention this, and I just want to really drill into this one. And then I'm going to do the indexes just real quick for everybody. So let's get rid of this. Let's get rid of the bells and whistles. Okay. And you know what? Just to clean this up, we're going to go monthly. And the month is pretty much over. So look at this level, 74.73. Look how we broke out. Look where the open is on the month. Look what the close is on the month. This is very interesting because you're seeing funds like Cathie Wood sell certain stocks, but what are they buying? She bought millions of shares of this. And I get it. I mean, I have been in this position since it broke this. See this cup and base and how deep it is all the way down to this 14 level from here? When this goes, the trajectory of this over this multi-year, 7-year base, this is the type of stocks that double. This is what you want to find. And what you're seeing is, look where we closed on the week. And now let's really overlay some things here, right? Now that we know that, let's just overlay a couple really key issues. This is the weekly. Look at this bar on the weekly. Okay? Look at these moving averages. Like, this was a solid move on a really awful reporting of quarters. And when you're on a stock and the stock goes up on bad earnings, pay attention. And now look, we're above on our volume. So that's it for stocks right now. And let's just go and flip on this real quick. See, I just wanted to show how it respects this. So this is definitely something that I'm in, and I would be looking at it. Look, where would I get concerned on my position? If I close below this 74, 73, that would concern me. So that would definitely be something that would be concerning. But let's just at least go through the cues, and then we'll kind of go from there. This is monthly on them. Now, I don't like how you're closing at the low end of this bar. I'm not crazy about that. And if we look at this just from a price standpoint, right, that's not the best, right? That's really not the best. You're basically closing at the low on the month. That's not a ringing endorsement for us running up. But I just want to hammer this point home. You see how we have touched, and I've mentioned this before, see how we have touched this 312 level, right? And we keep holding it. It's really important. You know, you usually don't break here. What is concerning to me is how the 50-day is starting to become resistance. That is concerning. And you should note that. So this is why when we were up here, I started saying, hey, your trades aren't going to work as well because you're hitting the top end of this channel. And obviously they're not working well now. And now you're starting to see wider bars. But you need to watch this. And you could correct, and you could come down to this 303 level. It's possible, but you need to watch this level, and watch I have this at 311.24. On the other chart, I have it at like 312.50. I kind of like the 312.50 level a little bit better. It's a little stronger, but here you are on just the weekly. Okay, here's your channel. Did you break your channel? Did you break your weekly channel? Here's your point. Here's your point. Okay. Yes, you closed out of your weekly channel. That's not the best. So we can go to this 21 week. We can go to this 303, 304 level. It is possible. So consider that when you're making your investment decisions, that why I think that we are bottoming, that does not mean that we're at the bottom. And you can see how this is holding substantially better. This is the IWM. And you can see how we're really holding in here on this, on the week. And we had this one trajectory, now we're just trapped underneath here. But this is definitely, and again, this is IWM. It's definitely holding in better. And if we drill down into this one a little bit more on the daily, they're the notes from the newsletter. But you can see, right, you're resting right here, right on the 50, 20, they're all pointing down. They're all rolling. So, and also the last index to go is the strongest one. The strongest index right now is the SPY. And then you can also say that the strongest index is, second strongest is this, right? You can even argue that this is stronger because of the correlation of where it closed. So, but at this 218 level, it needs to hold. And it is. It just happened to close right on it. But if you break these recent daily lows, you're going down. You're going to go to this 211 level. You're going to go to this 205 level. And, interesting, I have a note here about candles, so let's throw them in. Yeah, I mean, look, you can get into this. Here's a bearish engulfing candle at the top of this that encapsulated us. And then we never rallied, never came back from that, did we? And here's another bearish engulfing, right? And this one on the breakup was a major fail and then came back in. So we really need to see how this transpires. So, just be careful out there when you're trading. That's pretty much it. Any questions, give me a call. And, either via the email that people have or the Twitter or on YouTube. I do respond to everybody, but I do get a lot of messages. So sometimes it just takes a little bit of time. And as always, thank you for your time, and I wish everybody massive success.